The real-time real estate segment today being brought to you by rsrmoney.com. rsrmoney.com. Great tool, great site. I highly recommend. Well, I pay for it. It costs you nothing. Why else would you think that I think it's great? It's going to give you, it's going to monitor your credit score, monitor your assets, monitor your bank accounts, monitor your real estate values. And 97% of the properties across the United States that are available for sale are listed right there. rsrmoney.com. Mortgage rates, past, present, and possible future. If you're hoping to buy a home this year, you're probably paying close attention to mortgage rates, since mortgage rates impact what you can afford when you take out a home loan, and affordability is a challenge today. It's a good time to look at the big picture of where mortgage rates have been historically compared to where they are now. Beyond that, it's important to understand their relationship with inflation for insights into where mortgage rates might go in the near future. Giving context to the sticker shock, Freddie Mac has been tracking the 30-year fixed mortgage rate since April 1971. Every week they release the results of their primary mortgage market survey, which is averages mortgage application data from lenders across the country. If you're watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk AM 1490 video feed, you're seeing a chart of mortgage rates. 30-year fixed rate, April of 1971, all the way through to today. Looking at the right side of the graph, mortgage rates have increased significantly since the start of last year. But even with that rise, today's rates are still below the 52-year average. While the historical perspective is good context, buyers have gotten used to mortgage rates between 3 and 5%, which is where they've been over the past 15 years. 7.18 is the 52-year average, 7.18%. So that's because it explains why the recent jump in rates have you feeling sticker shock. Even though they're close to the long-term average, while many buyers have adjusted to elevated rates over the past year, a slightly lower rate would be a welcome sight. To determine if that's a realistic possibility, it's important to look at inflation. Where could mortgage rates go in the future? The Federal Reserve has been working hard to lower inflation since early 2022. That's significant because historically, there's been a connection between inflation and mortgage rates. If you look at the next graph, you'll see that again. If you're listening to us on radio, you got to go back and look in the archives of Ron Siegel Radio, or you can check out any of our socials or YouTube. It's all there. And we got a chart of inflation in the 30-year fixed rate mortgage. And this goes back, I don't have the exact date that goes back to, but graph shows a pretty reliable relationship between inflation and mortgage rates. Again, this is according to the BLS and Freddie Mac. Looking at the left side of the graph, each time inflation moves significantly, that's the blue lines, mortgage rates follow suit shortly after. That'd be the green lines. The circled portion of the graph points out the most recent spike in inflation, with mortgage rates following closely behind. As inflation has moderated a bit this year, mortgage rates haven't yet made a similar move. That means if history is any guide, the market is waiting for mortgage rates to follow inflation and head back down. It's impossible to accurately predict where mortgage rates will go for sure, but moderating inflation means mortgage rates going down in the near future would fit a well-established trend. Bottom line, to understand where mortgage rates may be going, it's helpful to look at where they've been in the past. That's a clear connection between inflation and mortgage rates. And if that historical relationship holds true, the recent decline in inflation may mean good news for the future of mortgage rates and your home ownership goals. Again, give me a call at 800-306-1990. Let's put together a strategic plan for you. That's the real-time real estate segment, again, brought to you by rsrmoney.com, rsrmoney.com.